It's always important to have your property insured. But one of the biggest pieces of confusion that a lot of people don't know the difference between is the actual cash value policy and a replacement cost coverage. Okay, there's a big difference for it, and it can cost you a lot if you don't know the difference. Just to give you guys a quick story about me, about maybe 10 years ago, one of my rental properties, I knew it was by that time, didn't have any bad leaks, but I knew it was time to replace the roof. So I actually called, put a claim in. The adjuster came out. He looked at it and said, yeah, Mr. Burden, we do have hail and wind damage on it, and we can, replace the roof, but you have a cash value policy. I said, okay, cool. So when can you send me the check? He said, here's the issue. He said, do you know the difference between that and a replacement cost? I said, no, because I put claims in on other rental property for on the roofs, and when the time came, seamless process, the adjuster came and I was able to get my check. The issue this time, he was telling me, like, listen, we're only going to replace it at the actual cash value of it. That's minus depreciation, minus the deductible. We're only going to give you $1,000 to get this roof repaired. I'm like, what? He said the issue of it was you had this particular policy, but he helped me out. He told me, listen, just call your insurance company, get it changed over, wait the amount of time. You list 30, I can't remember, 30, 60 or 90 days. And then you just put your claim back in, go through and have a replacement cost coverage put in. Call back with a claim maybe 60, 90 days, and then go through the process again. But what I want to do is just go through a quick tutorial to explain to you guys the difference between actual cash value coverage and also replacement cost coverage. Okay, before we get started, let me do a quick screen share. Here we go. All right, pretty much what we're going to talk about right now is the actual cash value replacement cost, the difference between the two. I am Deonte Burden, aka Mr. Short Dollar himself. Now, just to let you guys know, put this little handsome guy in the corner. All right, just to let you know what the actual cash value is, the current value of an item is not what you paid for it, and the actual cash value is what you paid minus depreciation. So, and theoretically, that means if you actually, the roof is paid $5,000 for something, they're going to take depreciation, which is the value of a particular item, how it decreases over a certain amount of time. So if you buy something for $5,000, it depreciates $1,000 each year. It has a life of 5 years. At the end of 5 years, it's decreased all the way down to zero, and it also be minus $1,000 after year one. A replacement cost value is the dollar amount you would pay to replace the damaged or destroyed property. Usually comes at a high premium because the insurer is reimbursing you at the actual current cost of the item. So what we're saying about the replacement cost, and this is theoretically what most people are thinking about, is that they're going to make you whole again in regards to, just say if you buy the roof for $5,000, you're expecting to get a $5,000 roof to replace the one that you had. Again, this is the other crucial part with it, it comes at a high premium. So you're going to pay more money for a replacement cost. I typically use a broker with most of my insurance policies. So I know a lot of times they're going through those pool of policies, trying to find me the cheapest one possible, at a decent value, but the cheapest one possible. So I can see why I was given the cash value. And once I called my broker to get that, to tell him what I had found out, he understood, because most time people that are in rental properties, some looking at a cash flow perspective, some looking at, just to, not to get caught up with how things like that happen. But that's one of the fundamental difference. The replacement cost value is going to replace it at whole, where there is no issue of depreciation with that. Since you know that you're only going to get what the value of that particular item is when you start talking what the actual cash value is, what would be a situation where you would get that? Because again, if you buy something for $5,000 and you want to replace at $5,000, worst case scenario minus depreciation deductible, you'll turn around going to get $1,000. What would be a reason why? Number one would, if you can afford the difference between that and the replacement cost. Everybody got different situations going on, so that was one of them things. Yes, be realistic with that. A newer item where depreciation isn't a factor, but you can switch to replacement cost value later on, and that's one of my items. Like, again, you may have the actual value may not depreciate that much, Well, later on, again, you can switch it, but on the front end, you don't want to pay that much in insurance costs. And later on, you're like, okay, I can do it because you don't lose too much in depreciation. How do you calculate actual cash value? Easy calculation. You got your replacement cost minus depreciation equal actual cash value. So again, we're talking about $5,000. You have depreciation, will depreciate after year one, 1,000, be a $4,000 value. Year two, it'll be depreciate 2,000. You have an actual cash value of $3,000. Is the deductible used? And this is very, very tricky because most of the time it is used. And this is what probably will just knock everybody out. The actual cash value minus your deductible equals your actual cash, your actual claims payment. So that kind of goes back to what I was saying in regards to you got the actual cash value, which was right at probably like $2,000. I had $1,000 deductible. They were going to give me a $1,000 check to replace a roof. So you got to make sure, guys, that you're on top of everything in regards to what you're doing, especially with your insurance policy. Knowing the difference between the actual cash value policy and a replacement cost policy. I would recommend that you get a replacement cost policy because, again, they're going to make you back whole with that. The actual cash value policy, again, is going to be cheaper. So if you're looking at everything from a cash flow perspective and you don't feel like you're going to get that big a hit in regards to if you have to replace it, fine, we're doing that. Okay, that can be the thought process. We're doing it. But if you know you're incurring something that's a major equipment, roof, any kind of structure like that, you need to make sure you got a replacement cost policy. I hope you like the explanation that we gave. Again, I'm Deonte Burden, aka Mr. Short Dollar himself. Make sure you subscribe to the YouTube channel, Mr. Short Dollar, where we talk about personal finance, business, entrepreneurship, and investing. Take care of yourself, guys, and be safe.